Hello students, so today I will show you one more sum, that is reconciliation of cost and financial accounts, and try to understand. Already I have explained the same type of practicals in my previous video. So here is the question. Red Limited made a profit of rupees 20,000 during the year 2010 as per their costing system. That means their profit given, that is of cost sheet. Okay, and whereas their final accounts disclose a profit of rupees 15,000. Again, profit here given, but this is related to what? Final accounts. Okay, from the following profit and loss account for the year ended 31st December 2010 as their financial books. So here profit and loss account given. You are required to prepare a reconciliation statement showing the causes for these differences. Okay. Now here you see, students, first of all profit and loss account given and cost sheet related items here given. So what you have to do, it is very simple and very easy. Just you have to do plus and minus adjustment. Okay. See, here many items given, and here also items given, but these are the items related to final accounts and these are the items related to cost sheet. Okay. Now what you have to do, those items here given and here items given, right? First you have to compare these two, and those items are same, that items you have to record in reconciliation statement. Okay, so see now here, opening stock of finished goods, that is given here, but see opening stock here it is not given, so you leave it. Purchases 80,000, but here purchases not given, you leave it. Direct wages 20,000 here given in trading account, but here also direct labor given 23,000, right? So this item you have to take. Here direct wages given 20,000 and here direct wages given 23,000. So in cost sheet 23,000, that is direct labor, that is the expenses recorded in cost sheet, that is more expenses recorded in cost sheet. When more expenses recorded, that means your profit will be what? Decrease. If profit decrease, you have to make it increase, right? How much difference here? There is 3,000, right? So see now here, you have to draw the format of reconciliation statement. First of all, you have to write here profit as per cost accounts 20,000, already given here. Profit as per cost account, that is see 20,000 during the year 2010 as per their costing system, right? So this 20,000 profit as per cost sheet. Okay, so first of all this one you have to write. Then after that I was talking about direct labor. So here direct labor, that is expenses, more expenses recorded in cost sheet. When more expenses recorded in cost sheet, that means your profit will be decreased. When profit will be decreased in cost sheet, you make it increase, it will be plus item. So add over recovery, direct labor 23,000 minus 20, whatever the difference, that you have to write here. Next item, factory expenses 50,000 given. Here see any factory expenses. Yes, factory overhead given 13,000. Now you see here factory expenses in final account, that is in trading account 15,000 given, and here factory overhead 13,000 given. So that means in cost sheet factory overhead, that means the expenses. So in cost sheet expenses recorded more. Sorry, here expenses recorded less in cost sheet. So when less expenses recorded in cost sheet, that means your profit increases. So you have to make it decrease. What is the difference? That you have to write in reconciliation statement. Okay, so see now here, what is the factory expenses at 15,000 and factory overhead at 13,000, 2,000 difference here. So it will come under less item. So under recovery of factory overhead 15,000 minus 13,000, that is 2,000. Next, what is given? Gross profit, you leave it. Then sales here given, sales items here not given, leave it. By closing stock of finished goods, closing stock here not given, leave it. Administrative expenses here given in profit and loss account, but administrative overhead and selling expenses each are calculated at 8% of sales. That means either administrative overhead or selling expenses, you have to calculate 8% of sales. The first you have to check what is the sales item, sales amount here given. sales item sales amount here given 1,75,000. If you calculate 8%, it will come 14,000. Okay, now you see here administrative expenses recorded 10,000, but here administrative overhead 8%, if you calculate, it will come 14,000. That means administrative overhead recorded in cost sheet, that is overhead is an expense. So here more expenses recorded in cost sheet, right? So when more expenses with 14 administrative overhead here is 10,000, here expenses, yes, 14,000 it is coming. If you calculate, the more expenses recorded, when more expenses recorded, so your profit is decreases. Now make it reverse, it will be increased, so it will come under add items. So see here, add administrative overhead 14,000, that is 8% of sales calculate, and 10,000 here given, the difference is 4,000 coming, right? Next point, there is the selling expenses. So here selling expenses are the same thing, 8% of sales. If you calculate 14,000, that means your selling expenses 15,000 recorded, and here in cost sheet selling expenses recorded, that is 14,000. That means in cost sheet less expenses recorded. When less expenses recorded, that means your profit increases in cost sheet, right? So make it decrease, less, it will come under less item. Okay, that will be the next page. I'll show you whatever the difference here is coming. There is, oh okay, 1,000 difference here coming, right? That 1,000 it will come under less item. Okay, and that's all. So I'll show you the next page, just wait. Okay students, one more thing I want to show you. Here see, closing stock of finished goods given, that is 80,000, and this item left, no, stock ledger closing balance. The stock ledger closing balance, that is the closing stock, here given 89,000. That means in cost sheet closing stock recorded 89,000. Closing stock is an income. So here in trading account income, it is showing 80,000, and here income 89,000. That means in cost sheet income recorded more. When income recorded more, that means your profit also getting more, right? So you have to make it in decrease, because here 89,000 closing stock recorded in cost sheet, but here it is recorded 80,000. That means recorded here more in cost sheet income. So when income recorded more, that means profit also increases, right? So you have to make it decrease. So how much difference here? 9,000. It will come under less item. Okay, then I will show you the solution and try to understand. Now you see this solution here. Selling expenses 15,000 minus 4,000, difference 1,000. And see here, overvaluation of closing stock and cost accounts 89,000 minus 80,000, the difference here is 9,000. So 12,000. If you add all these items, then profit as per financial accounts, you are getting 15,000 rupees. Okay, it is very simple and very easy, everybody can do. Okay, so I hope you understand. Okay, then thank you for today.